It's the beginning of the new year, and everybody's talking about investing, saving, investing, and more investing, and more investment, and this, and stock, and shares, and all that. And you're wondering, what are they talking about? What's all this jargon? I don't understand this. I would like to invest, but I don't even know where to begin, and I don't know anything about investment. If you're such a person, then this video is perfect for you. In today's video, I'm going to be breaking down all the jargons that you hear about investment, the steps you can take to invest, and the things you should know about investing. Hello there, my name is Rachel from Financial Oasis, your financial guidance to attaining the life of your dreams. In today's video, we're going to be talking about Beginners 101 for personal finance. That's everything you need to know regarding investment, saving, and all of that. Let's dive right in. Now, you might have started the year with, this year I need to be more financially stable, I need to be more financially independent, I need to be prudent with spending, I need to save more than I spend, I need to do this, I need to do that, all to encompass having a good balance at the end of the year, having something tangible in the bank, having something tangible in your retirement savings, having something tangible in your investment portfolio. If that is what your aim is at the end of this year, then you should listen to this video. There are certain steps that you need to follow with regards to personal finance, regards to saving and investing, and I'm going to be talking about the steps in the video. Now, in terms of saving, when it comes to saving, the first one that should be priority on your list is what I term as emergency fund. So you know how people wake up in the morning and then something that was not planned, something that was never in their books suddenly comes up. You wake up the next morning, you get to the office and you're suddenly fired, or you were involved in an accident and you have to pay for medical bills, or a sibling needs money for an emergency, or just something that requires you to provide money immediately. And because you didn't plan for that, because you didn't think about that, you didn't make provisions for that, you were left stranded, or you're left going around to beg people for money, or you're left going around to look for a way or the other to get the money. You don't want that this year. That is not the way to attain financial freedom, because doing this will end up putting you in debt, and you do not want to be in debt. So the typical amount is usually like a month's worth. That is what you're supposed to begin with. So if you're earning $200, you should work with having at least $200 sitting, waiting in case of emergency. And then you can slowly build that up to 3 months, 6 months worth of saving strictly for emergencies. Now, the next step you should know when planning to attain financial freedom is to pay off debts. I know there are different reasons why people go into debt, either to pay for schooling, to pay for medical bills, to pay for this, to pay for that. But for whatever reason you are currently in debt, what you should work towards is clearing that debt. Because you can't say you are investing, you're keeping money somewhere, and you have a $100,000 debt somewhere waiting for you. If you do not clear that off, even if it's gradually, little, you would find out that the debt will keep growing. Although the money you're investing for whatever investment is growing, but at the end of the day, you might have to use that investment to pay off the debt that has now grown even higher than it was 2 or 3 years ago. So you want to pay off any debts that you might have, as that will just end up pulling you back. So you take 2 steps forward by investing in this and that, but then you take 5 steps backward when you have to clear debt. Anyone who is in debt and has money sitting down somewhere and say that they're investing, they're only deceiving themselves, because at the end of the day, the debt is still your liability to cover. Now, the next step to attaining financial freedom is saving for retirement. I know you might be like, but I'm just 19, I'm just 20, I'm just 21, I still have a lot. The long time you think you have might just, it's like this. Because you're 21, before you know you're 35, and then you're hitting 40, and then it's time to retire, and you have little to no money put in retirement for you to enjoy when you cannot work. In fact, it is best that you start saving early, because that way, before you hit retirement, say in your 50s or in your 60s, you have saved enough to cover you for the rest of your life without having to bother about funds, without having to depend on your children or on your grandchildren or people around you to take care of you. So the earlier you start, the better for yourself. Save for retirement. Now, there are different types of retirement that you can decide to have. One is called the 410k. This is kind of retirement that your company or your organization that you work with open for you typically. So what happens is a certain amount is deducted from your salary and placed into a retirement account for you. And then your company add some amount to match up with that money to push it higher. So, for example, your company could take 20% from your salary, from your monthly payment, and put in that account for the purpose of retirement. And then the company, because you're their staff, decides to add 10%, that leaves you at 30% monthly for retirement. So imagine if you start doing this at the age of 20, and then you continue growing the account like that. By the time you are 50, you can decide to just travel the world and not care about, oh, how do I cover for my expenses? How do I? Now, this is dependent on how much you earn also. So the more you earn, try as much as possible to save more for retirement. The other option is the personal retirement account, Roth IRA. Now, for this one, you are the one who's going to say, oh, I want to save money because, so for example, you don't work with an organization, you have a business of your own. You can decide to say, oh, I want to open a personal retirement account for myself. That way, I save for myself for the future. So if you don't work for an organization, if you're like, oh, I don't work for an organization, I work for myself, I do my own stuff. The other option is the personal retirement accounts that you can have. So now that I've talked about the steps that you should follow to attain financial freedom, let's talk about some of the terminologies regarding investments. The first one I'm talking about is stock. Stock represents the share of an organization. So when you say, I'm buying this company's shares, it means that you are owning a part of that company. So for example, you decide to buy the shares of Facebook or of Amazon. Now what that translates to me is that you own a percentage of Amazon. The same also applies to if you buy the shares of Facebook. It means that you are a share owner, like you're a part owner of Facebook. That is what stock means. So when people say, oh, I'm investing in this stock, I'm investing in that stock, it just means they're owning a part of an organization where they are putting their money. That's all. That's the literal meaning of stock. So when next year people talking about, oh, this stock, that stock, do not be confused because it's simple. It just means a share of an organization or a share of a company. Now, the next terminology you will hear is something like stock markets. Stock market, the stock market crash, the stock market this, the stock market that. The stock market is simple. It's just a place where the stocks are traded and where they are held. That's all. So when people are saying, oh, this stock market is this stock market is rising, this stock market is that, it just means the place where stocks are traded and held. The stock market is largely controlled by the investor's emotion. So an investor hears that this company's stock is going to crash in a couple of weeks or crash the next day, and then they start to pull out their money. What happens to that stock? It actually crashes. And then maybe after like a couple of months, like a month or two, they hear that, oh, this company's shares or this company's stock is going up again, and then they go back and reinvest. Now that just tells you that the stock market is largely controlled by the emotions of the investor, because the truth is nobody wants to lose money on the long run. If I put my money here for investment, all I want to get on that investment is profit. Nobody wants to lose money. So the panic and all of that is usually controlled by the emotions of the investors. Now, the next terminology you should know about is what they call risk and reward. Just like it says risk, there are some type of investment that are very risky. But then the beauty of this kind of investment is that their rewards are usually bigger and higher. It means that if you take the risk and then it pays off, you're getting double, triple of whatever it was that you invested. Also, if you take the risk and then it goes all the way down, it means that your money goes down the drain. So this is usually what determines how much people are willing to invest in an organization, in a company, in a body, because they're like, how risky is this? Now, if you're someone who is a risk averse, you will not really want to put so much because you'll be worried that if I put this money and then it goes down the drain, will I be able to survive it? Where do I start from? And all and the third. If you're someone who's a risk taker, you will always get large reward because a lot of the time, the higher the risk, the higher the reward. But if you're someone who is risk averse, well, you can put your money in other things that with very low risk, but then it means that you also get low returns on your investment. That's what that translates to mean. Now, the next terminology I'm going to be talking about is what they call bond. Now, bond is a loan that an individual or a body of people give to an organization or to the government, and then they earn returns, monthly return, a fixed monthly return on that investment over a specific time frame. So if you decide to loan, if you have enough money to loan your government, or to loan an organization to run their daily activities, or for whatever reason you decide to loan an organization a certain amount, and then you guys agree that you will pay me a certain amount, a fixed amount over a certain time frame, then that is a bond. The next terminology that you might hear is what they call investment fund. I'll use a very simple example for you. When you say you're buying a share of a company, that's similar to buying a flower. So you want to buy a flower for your friend, for your partner, just one flower. But then when you hear investment fund, it means you're buying the entire bouquet of flower. So the bouquet contains different types of shares, different types of stock, all in one package. That is the literal meaning of investment fund. So when you hear investment fund, it's just a whole bowl of stock, shares, and everything investment, all wrapped up into the investment fund. So now I've talked about the terminologies relating to investment, and then we've also talked about the steps that you need to take to attain financial freedom. You might be asking yourself, when is the best time to invest? The best time to invest is yesterday. Yes, because the earlier you begin, the better for yourself. So start that investment now. Read about it, do your research, make sure that you're comfortable with putting your money in whatever it is that you want to do, so that if the reward comes and you say, yes, I did this myself, and if it doesn't come in, you will still be accountable for what you did. So make that research, ensure that for every company you want to invest with or invest in, ensure that you've done your due diligence on them, ensure that they are trustworthy, ensure that you're certain that your shares would not go down the drain over a certain period. Now, some people usually pay others to do this for them. It's something you can do, but that's still you paying extra money to someone to do that for you. And even with that, it's not 100% guaranteed. You can read about this yourself before going ahead to make a decision. Also, if you say you're going to predict the market, you're going to sit down and determine when is the best time to invest, that's not something you want to do, because that's similar to you gambling with your money. There are experts who are known to do that, and even the experts sometimes do make mistakes. So you don't want to do that. You don't want to play gamble with your money and say, this is the best time to invest. I heard that this one is going up. I heard that one is going up. Let me quickly put my money in there. That is not how you want to invest in. That is not what you want to spend your money on. So make sure you are investing in something that's profitable, something that is for a long period, not a 6-month plan, a 3-month plan. That's not the kind of investment that you want to do, because such investments a lot of them are quite volatile. So when they blow in your face, they blow completely in your face. So when I say talking about the stock market, talking about investment, talking about shares, I'm sure after watching this video, you will not be confused. You will not be wondering, like, what are these ones saying? Because you have been enlightened as well. Thank you for watching my video. If you liked what you just watched, remember to hit the like button. You should also subscribe to my channel to become part of my family. And remember to hit the notification bell so that YouTube personally notifies you every time I drop a new video such as this one. Remember to share this video with your friends, because you'll be helping someone out there to also attain financial literacy. And last but not least, leave a comment in the comment section letting me know about any other topic related to personal finance that you want me to talk about. With that, I will see you in my next video. But remember, your financial freedom begins with you.